Well, certainly the reaction by the U.S. airlines earlier this week, forecasting a weaker Q1, has sort of woken everyone up significantly. But they did make reference explicitly to the domestic market. And generally, the discussion is about intra-U.S. travel. I think we'll have to see how that develops. And of course, there's all kinds of macroeconomic reasons. An interesting statistic, 3% of all US domestic travel is by government employees. So if those government employees don't travel because they've been told to reconsider or maybe not come to work, you will definitely be able to tell the difference.
That's so interesting, and something I know we're all trying to factor in here, what the prospects are for the U.S. government spending over the course of the next months. What about the transatlantic route? I think you raise a great point that a lot of the concern is around what's happening domestically in the U.S., but the transatlantic route seems to be holding up quite well. How sensitive is that route to the economy and a potential economic downturn?
Sure, absolutely. And all three U.S. airlines spoke with great confidence about transatlantic travel over the months to come. And if you look at the results presentations of the three European majors over the last few days, they've also been quite confident about traffic. So it looks like overall long-haul travel between the US and Europe continues to be quite resilient. So all in all, in advance, we should be a little bit more shielded that whatever effect is going on right now, hopefully temporarily in the US, on domestic travel, yes.
Canada has been an unlikely suspect in this trade tariff war. I mean, so close to the Americans, but yet a very big target now, it seems. And of course, we're waiting up for Mark Carney to see what that means in terms of negotiations. Do you think there's going to be some sort of a hit to sentiment because of the tariff conditions for Canada?
There's clearly been a reaction. So statistics are coming through about US-Canada border crossings, and they've been down over the last couple of weeks. And we at WestJet also have noticed a decline in traffic. What we are seeing, though, is people changing their destinations. It's no longer Phoenix or Florida, it's Dominican Republic, Jamaica, and Mexico. So Canadians are seeking to continue to travel overall. It's just they may shift from the U.S. to other leisure destinations.
So that's a customer backlash you're telling us about?
There's definitely a reaction in travel between the U.S. and Mexico. There's also, U.S. and Canada, and there's also some evidence about Mexico-U.S. travel. Let's hope it's temporary, but yes, at the moment, yes, there appears to be an impact downward on travel between both countries.
Can we tackle the macro here? Because when we talk about some sort of potential for recession or stagflation, then customers and businesses get a little bit cautious. But at the same time, we've got oil prices that have seemingly settled a little bit lower than where they've been. Typically, that puts more money back in the pockets of consumers. So how tricky a macro environment are we dealing with now because of all the noise from the White House?
Well, and the question is, will one cancel the other? So will lower prices provide a higher profit or be able to neutralize a potential lower demand? It really depends on the type of airline and market that you're serving. If you're a leisure carrier, leisure is quite resilient. Here in the UK, when we had the great financial crisis, people didn't stop flying to have their vacation. They really wanted to go. So we hope and we think that we will continue to see resiliency across leisure, business travel, visiting friends and relatives. Maybe for a short period of time it'll be affected. But once again, very regionally focused. Domestic US, maybe Canada, Mexico to the US, etc. Not so much Europe.
It's fascinating to hear that you're already seeing a change in customer preferences between Canada and the U.S. As a result of what's going on at the geopolitical level. What about Europe to the U.S.? Is there any sign that Europeans are looking to travel less to the U.S. given all the pressure and the negative tone coming out of Washington against the EU?
So not so far. And I think it's probably too early. And all the commentary by both U.S. and European airlines has been, again, quite bullish about bookings coming up this summer. So no, there is no evidence at this particular point. Remember, airlines do have these assets, airplanes. They can move them around. If planes are emptier to a particular destination, they put them somewhere else. We will react to traffic flows.
To that point around the supply, we know that there have been industry supply issues getting your hands on enough jets to meet the supply, given all the production issues that the likes of Boeing and Airbus have faced. How real is that story for you in 2025?
It's super real. As of February, 739 aircraft parked because of engine problems. Brand new aircraft we would love to fly on. But unfortunately, the new technology of engines plus supply issues have forced some of those engines not to receive extra attention which means the airplanes haven't been able to fly. This supply chain problem is likely to be with us for a few years. It will slowly solve itself, lots of investment taking place, Boeing trying to get its act together slowly. We will get back into the same production rates we were in before, but it looks like it's going to take a little while.